morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're dissecting and digesting some more financial results. We're talking, of course, about Agostini Limited for their fiscal half-year period ended March, as well as TCL or Trinidad Cement Limited for their first quarter ended March 2024. Now, both groups have reported some improvement in earnings. Let's take a look at what would have taken place and what investors might expect in the coming quarters ahead. Turning firstly to AGL, for their fiscal half year 2025, the group recorded an earnings per share figure of $1.81 per share, a 2.8% increase from the $1.76 recorded in that prior comparable period of 2024. Driving that performance was an improvement in revenue of 8.1% from $2.57 billion to 2.7, almost $2.8 billion. Overall operating profits improved by just about 2.7%. From 269 million to just about 276 million. After taxes, profit attributable to equity holders would have improved at 3% odd from 121.6 to 125.2 million dollars. Now, in terms of contribution to profits before tax by segment, we see that there were some changes. In fact, the consumer product segment down just about 7% in that orangish color, from 130.1 million to just about 121.3 million. This was offset partially by a roughly 6% increase in pharma and healthcare. In the pharma and healthcare segment, that greenest segment, from just under $98 million to just about 103.4 million, while energy, industrial, and holdings, after a fairly significant one-off gain in that half-year period of 2023, normalized in 2024, but still a 21% odd gain from 10.3 million to 12.5 million in that growth segment. So overall, PBT having some significant changes at the segment level. Now, in terms of profitability margins, there was a somewhat of a deterioration in this particular metric, with profit before tax margins falling from 9.3% to 8.6%. And even from an operating profit basis, there was somewhat of a narrowing of operating profit margin from 10.5% to 9.9%. So, of course, cost management and the integration or successful integration of recent acquisitions would be important and effective in terms of turning that particular trend around and returning profitability margins to an increasing trend. Now, from a valuation perspective, we can see that there was, on a trailing earnings per share basis, some improvement in that quarter-over-quarter metric from $3.14 to $3.56. And with the relative stability in price, there has been some relative cheapening in Agostini stock from 22 times earnings per share, or price to earnings ratio rather, to 18.8 times, still relatively above the sector averages, of course. So at a price of $67 per share, AGL is trading at that price earnings ratio of 18.8 times, which is above the sector average of 13.9 times, and offers investors a dividend yield of 2.3%, roughly in line with the sector average of just about 2.4%. So with that revenue growth in mind, continued acquisition activities with their latest acquisition venture under some scrutiny, given the FTC's recent comments, and above average valuations, Bourse is maintaining a market weight rating on AGL for the time being, with a stable outlook. Turning very quickly to TCL, for their first quarter ended March 2025, the group would have reported an earnings per share figure of 17 cents per share, which was an impressive 12.4% increase rather from the 15 odd cents per share recorded in that prior comparable period, that is the first quarter of 2024. Now, driving this improvement was a fairly significant increase in revenues of 9.3% from $573 million to just under $627 million. Overall operating earnings actually improved 11% from $116.6 million to just about $129.5. Net income attributable to the controlling interests or shareholders would have improved at 11.8% from $57 million to $63.8 million in that first quarter of 2025. Now, when we take a look at revenue trends, we can see that there has been consistent increases over the past few first quarter comparable periods, from $493 million rather in that first quarter of 2021 to the most recent 626 odd million in that first quarter of 2025. Driving that has really been increase in cement sales, moving from that $471 million in that first quarter of 2021 all the way up and consistently to 610 million in that first quarter of 2025. And this would have been supported by several price increases, with the most recent taking place in February of 2025, a roughly 7% increase or thereabouts. And that would have also been supportive of TCL's operating profit and overall profitability margins. And as we can see, in terms of its gross profit margin, fairly stable at around 35.4%, but from an operating profit perspective, that in that very segment, that would have been improved from 20.3 to 20.7%, with an overall profit before tax margin improvement in that first quarter of 2024 from 18.4% to just about 19.8%. So certainly trending in the right direction. And that, of course, would have been supported by several price increases over the past few years. So at a price of $2.05, TCL is trading at a price earnings ratio of 4.9 times, which is well below the sector average of 9.2 times, with a fairly generous dividend yield of around 5.9% based on the most recently declared dividend, which is well above that sector average of 4.7%. So looking at that solid revenue growth and improved margins, as well as the resumption of dividend payments, but of course, keeping an eye on the competitive landscape with certain pronouncements in April made with respect to the proposed zeroing off duties on imported cement and the potential that could have in terms of price competition and volume competition versus maintaining a market weight rating on TCL for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website, boursinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.